Okay, we're starting a few minutes late, but not too much. My name is Nicolas Véron. I'm a senior fellow at the Peterson Institute for International Economics in Washington, D.C., and at Bruegel in Brussels. So this is to say I'm a policy person, not a market person or money person, so I'm here to learn, and I expect to learn a lot. Our topic today is global money move. Basically the dynamics of global capital flows and how they impact the world. Let's start with you, Jim. How do you look at the world now?
I'm delighted to be here. Yes, my name is Jim Rogers, but I don't have a job. So, maybe I shouldn't be here. I don't know. I know we cannot talk too much about that, but I will say to you, as far as investing is concerned, in other places, at the moment, I'll use America since that's the largest stock market. The American stock market has been going up for the longest in American history. Never in American history has the economy and the stock market done so well for so long. Maybe it's going to go on forever. Washington says it will. Don't worry. But when Washington says don't worry, I worry. I worry a lot. So as far as my investments are concerned, I have sold nearly all stocks all over the world. The only places I still have shares are China. The China stock market is depressed. It's one of the few stock markets in the world that's depressed. And Uzbekistan. Uzbekistan is an old Soviet, whatever they call them, Soviet economy, which was ruined by the Russians. Now it's changing, and so Uzbekistan may be an extremely exciting place to make money. China may be too. So other than that, I am worried about the world. I will repeat, the U.S. stock market has had no problems for the longest in American history. So I'm very, very worried about what to do with my money. I have a lot of cash, and I have the cash mainly in U.S. dollars. The reason I have it, the U.S. is a terrible place as far as the fundamentals. The U.S. is the largest debtor nation in the history of the world, and it's getting worse every day. So you should say, well, why do you own U.S. dollars? And the reason I own U.S. dollars is because when the turmoil comes, people will look for a safe haven. And many people think the U.S. is a safe haven. It's not. We're the largest debtor nation in history. But because people think it's a safe haven, the U.S. dollar will go up. If it happens that way, I'm smart enough to sell. And now one of these smart panelists is going to say, well, what are you going to do with the money then? And I don't have an answer. Maybe you have an answer. I don't know where to put my money when I sell my U.S. dollars. So we will listen to them to find out. Thank you.
That's a teaser. Jim,
Yes.
Where should we put the money?
Well, one of the things that we watched this, the world's really changed ever since 2019 to 2020 when COVID hit. And like what Jim said, with the amount of money printing in the U.S., a lot of assets got inflated. The stock market, real estate market, interest rates had to kind of go up. And with that, a lot of issues happened because of that. And with that, a lot of dry powder stayed on it because of the deployment of where you could put the money didn't make as much sense because with all the money printing over the last 5 years, 80% of money has been printed. Just think about that. So it had to work its way through the system, and we've seen, as Jim said, stock market going up, real estate market going up, a lot of turmoil in America, but the good thing is in US dollars, we see the power still of the US dollar relative to other currencies. So as we started watching globally, money started flowing in for a while as we kept on watching interest rate rise. We were all hoping, and I couldn't believe who said that. Last year, we were going to have 7 rate cuts. 7 rate cuts. And I remember in 2023, fourth quarter, they were talking about 7 rate cuts, and then the stock market started going crazy. We were all waiting for the market to cut in America, watching all these changes in financial, from the economists watching what was happening. But, we don't have it. But now we hope in September something may happen. But usually we've always watched what happened before. When you do cut rates, you may get a little tick and then the recession hits us. But I'll just say this, like all of us, we know with what happened with the move up with the assets, multifamily, retail, and industrial, they're kind of coming back to that line. But with office buildings, that's the one that's still stagnant, but we see a lot of opportunities depending on how we want to reposition it around the world and how we can use the land to better serve. And I think that's one of the biggest things in a lot of the urban cores through office buildings. It's a lot of innovation and, like I know it started in Europe, a lot more green bonds, green energy, technology to really use some of these office buildings. And for those that have been around 20 years when they said the mall was dead or changing, it was just changing. Things were overbuilt, just like the office buildings today. We're just going to have to reinvent and use the office. But as everyone knows, when this happens, when the Band-Aid gets torn off, some people are going to be hurt, right? And that's what we're seeing. A lot of these smaller community banks that lent a lot of money to these asset class.
Amir, what do you make of it all? It's a customs officer's question. What do you have to declare?
Yeah.
But that will start our conversation.
Well, first of all, when I found out that I'm on a panel with Jim Rogers, I said, I think I don't belong on this panel. And I was very excited for about 5 seconds and just full of fear afterwards, because if he's asking for my advice, this is all backwards, because I'm here to get a lot of this information from him. For us,
I need your advice.
So I've been in this business for 31 years, advising high net worth, ultra high net worth clients, and the more time goes by, the more I realize how little I know and how little the vast majority of people out there know. So Jim has been really one of the rare exceptions. Jim and George Soros and Warren Buffett and Charlie Munger and just a handful of people, really. And for us, what we found for individual clients, individual investors, is that what has led to the most peace of mind for them and what has led to more consistent returns, but not big returns in the long run, is to focus on asset allocation and on their time horizon and on their goals first and foremost. So the biggest question we always try to answer first for clients, depending on their risk tolerance, their time horizon, is what percentage of your overall assets should be in the I'll call it 5 major categories, because one of them is basically everything else. It's cash, stocks, bonds, alternative investments, and real estate. So sometimes we include real estate and alternatives, sometimes it's its own category, but those 5 categories. And that's the biggest question that we try to answer for clients, is what percentage of your particular assets, and that's customized for each person, should be in these 5 asset classes. And then the next question is, within those asset classes, within stocks, how much should you have in US large cap, mid cap, small cap stocks? How much should you have in developed countries, in emerging markets? And I do have questions on this for you, because we don't invest even in individual countries, we invest in diversified portfolios, so it's something that we're trying to consistently learn upon as well. But the premise is that you have to start with yourself, your own portfolio, and your risk tolerance, because what we found is that there's a whole field called behavioral finance that studies investor behavior, and we found there's a lot of different typical mistakes that investors make, herd mentality, following the latest things that you've heard about, and other things that cause you to either freeze when you should act or act when you should not. And we find that when you start with a diversified asset allocation portfolio customized to each person, that it actually helps, along with consistent education, that it actually helps eliminate a lot of these investor behavioral gaps that really impact portfolios in a negative manner. The second thing that we found is that the private markets have really opened up to where individual investors can be involved with private markets, whether it's lending to real estate, or whether it's real estate or private equity or private credit or alternative classes that don't have correlation, even things like life settlements that don't have any correlation to stocks or bonds, is a very growing category for individual investors, because this had typically been for institutions with multi-million-dollar minimums, and your money gets invested over a period of time. You have no liquidity for 10 to 12 years. That whole field has been opening up to where there are evergreen alternatives available that you can get true diversification away from stocks and bonds in asset classes that can also make some sense.
Thank you so much for setting the scene so masterfully, also for being succinct in your initial remarks, because we want to have a conversation, so I encourage you to make it conversational, interrupt me when I'm too long. Jim, back to you. I'll ask you two questions, one about China, one about the US, and they're kind of obvious questions. The first one is about China, and I'm sure you get this question all the time. Don't you get tired of staying in China because the stock market has not been great in recent times, and people say Xi Jinping doesn't like business, and probably he has a say on what happens in China. So what drives your continued optimism about China?
Well, I will hasten to tell you again, I make many mistakes, and I have made many mistakes in my life. If you want me to, I will tell you about my first wife. Oh my God, what a mistake that was. So I have made many mistakes, but as I look around the world, China is one of the few countries, if not the only, which is rising. China has had, in its history, has been on top 3 or 4 times. It has collapsed 3 or 4 times in history. In my view, it is now rising again, and the Chinese market is depressed. Most stock markets around the world at the moment are at their all-time high or near their all-time high. China is depressed. That doesn't mean it's a place to buy, but as far as I can see, the Chinese government is trying to revive the economy and to revive the country. And I don't see any other markets that are depressed enough for me to buy. The United States is at an all-time high. The Japanese market was down for 35 years. That is not a typo, 35 years. Now it's gone up, it's making new highs again. I sold my Japanese shares. I sold them too soon. But I don't see many markets now that are depressed other than China. So I, for the most part, am not investing in shares in many places around the world, but China is depressed. Does that mean I'm right? Of course not. Of course not. But it is depressed, and maybe I have a little bit of protection because it is depressed.
So just spending one more minute about this, you said it's a depressed market. That assumes it's a market. When we look at the share of private sector companies in listed market caps in China, actually that goes down, not up. If you look at the last 3 years, the share of SOEs in the market cap, aggregate market cap of the top 100 listed Chinese companies has gone sharply up, not down. Are you confident it's a market?
I'm not confident of anything. I can't tell you. I'm always worried. I'm always afraid when I make an investment. Oh my gosh, am I going to make a mistake? No, I wish it were that easy. Wouldn't it be wonderful if I could just buy shares and know that I will make money? No, I'm always worried. And I am worried about my Chinese investments right now. But if I look at Japan, if I look at America, these are 2 major economies where the stock market's at an all-time high. China's not at an all-time high. Does that mean I'm going to make money? Of course not. But I don't see any other markets in the world right now that are somewhat down.
So my next question is not about Uzbekistan, it's about the US. And you alluded to the ability of the US to be the safe haven that people come to when there is a crisis. One aspect of that is what now late French minister calls the exorbitant privilege, the fact that the US can borrow a lot and there's always a demand for its debt. Now, the US is making a lot of use of its exorbitant privilege these days. The deficits are out of control, the debt is out of control, the fiscal situation is unsustainable on basically any reasonable yardstick. If it's unsustainable, will it continue to be sustained?
Well, first of all, you use the word safe haven. I don't ever use the word safe when I'm talking about investments. I don't know anything that's safe. If you do, hooray, tell me. Write it down. Give me a note. No, there's no such thing as a safe haven, a safe investment when you're talking about money and investments. So my strong advice to all of you is only invest in what you yourself know a lot about. If I tell you to invest in Uzbekistan, and you cannot find Uzbekistan on a map, do not invest in Uzbekistan. Stay with what you know. I am American. I know a little bit about America, but I know that the American stock market's at an all-time high. I don't like to invest in things that are at an all-time high. I know your parents taught you to buy low and sell high. There are many markets in the world. I mean, I invest in commodities at times, but even commodities, I mean, gold is at an all-time high. Gold has never been this high. If you want to invest in precious metals, I would suggest you invest in silver. I own silver. I would buy more silver today. See, I will show you.
He's taking notes.
Wow.
Here,
you go.
this is not a gift. This is just an example.
We're watching.
But silver is down 40% from its all-time high. Gold is at an all-time high. I own both, but I would buy silver today because if the world has a big problem again, many people will go to precious metals. I'm an old peasant, and all of us peasants know we need some silver in the closet. We need some gold under the bed. But there are other things, cotton, wheat, oil, many other kinds of commodities. And in the world in which we live today, I had rather own commodities than stocks in most countries in the world. But they're bonds, they're currencies. You can invest in US dollars if you want to invest in currencies. I hope all of you will learn about the other investments besides just stocks in Korea or stocks in America, because there are many ways to make money, and I would urge you to start thinking about maybe some other things.
I'd like each of you to give a very brief response to a very complex question. Where in the world at this point do you see financial stability risk?
Well, I will go back to the world right now. Most financial markets are booming. And in my experience, when everybody's happy, it's a time for me to worry. One of the few places that I know is Uzbekistan. Uzbekistan was a Soviet republic. It was ruined by the Russians. It was ruined by the communists. But now there's a new crowd of people in Uzbekistan who are running things the way that Amir would run things. Maybe that's right, maybe not. But if you cannot find Uzbekistan on a map, do not invest in Uzbekistan. You must invest in what you know if you're going to be successful.
Amir, financial stability risk?
I'm going to go with what Jim said. I'm going to defer to him on this. I think that there's risk everywhere.
So James, you won't escape my question.
Yes. I am also of the opinion of when everything is too high and inflated and numbers don't make sense, I do go to commodities. I do diversify in more stable assets. I always do take some chips off the table. And like I said, I do wait for more stability, especially after the big one with the US election, that all of us are thinking things are propped up artificially. So we need to have certainty, and that's the one big thing. So we did move assets, and that's why there's a lot of dry powder for me in the US cash and other cash equivalents or securities that won't fluctuate as move too much into really the geopolitical or the election risk in the US, because that will ripple across the entire world.
This is a great way to conclude our panel. I think we got incredible amounts of wisdom from our three panelists. I heard a few things about how to get rich and how not. Please give them a big applause.
Thank you.